in the next 15 minutes is a report I'm releasing today that focuses on cross-border investment and merger and acquisition. So this is actually part of my weekly news that I come out every Monday, 7 a.m. that I just love doing research. So every week I want to know what's going on in terms of Silicon Valley on all the investment happened for the week and all the M&A. So as I was preparing for this talk, I really got a kick out of, wow, I didn't know like all these things are happening, particularly cross-border. When we talk about cross-border, it really means that, okay, US companies invest or acquire companies overseas, or any non-US company come and invest, acquire, and merge with local companies. So I started to do a lot of different comparisons, hence this particular report. But anyway, you can get this report for free if you sign up for silicon.news. This was my Christmas project that I think is really, really fun. So you guys can get a copy of the report. So really, really quick, I started to think, okay, so we're cross-border. Unfortunately, I don't really speak Russian or Arabic, but I can teach you at least Chinese how to say cross-border, which is 跨境, which is the Chinese word over there, if you want to know. And this is the rest of the different languages for cross-border, which I found is actually quite fun, and I can't pronounce any of these. All right, I started to think when I think about cross-border, there's just so much work. Legally, financially, why do people even bother? And I started to look at historically, what are some of the top cross-border deals? And Naspers investing in Tencent is absolutely the deal of the century. And of course, Tencent stock price have gone up and down. Last year was 5,000x return. And this is actually, I looked up yesterday, based on Tencent is about, I think right now, $430-some billion in market cap. So if you do the calculation, which Naspers, which is a media company from South Africa, that only invested for 32 million in Tencent for 33.2%, and by the way, they sold 2% last year for $10 billion, and they still hold it today. This is absolutely the deal of the century, and that's why people continue to do cross-border deals. And then another deal that I want to point out is SoftBank invested in 20 million for 34% of Alibaba. This actually based on Alibaba valuation today is 7,450x return. I have no idea along the way how much SoftBank have sold, which I'm sure they have. But I just want to point out that Jack and Masayoshi-san have lost a lot more here now, but they are very happy CEOs and investors. And then another one, which is quite well known from a few years ago, that Yahoo from Silicon Valley invested in $1 billion for 40% of Alibaba, and that is 175x return. Okay, it's not the 1,000x return, but to me is still good enough. Much better than most of the VC funds that we see today. And this is very happy Jerry and Jack. All right, so these are, this is actually working. Oh, did I make a mistake? Let's see. There we go, maybe. Weird. Anyway, so in the next page of the slide is focus on all the top 10 deals that we looked at in terms of like cross-border deals. So from anywhere from a lot of TSD from Russia, from China have actively invested in the US and vice versa. More and more of American companies are also looking at to invest overseas. What do you think happened? Okay. All right, so I'm just gonna keep talking, even none of these work. All right, so there's about top 6 trends I started to look at when we look at cross-border deal. Is this definitely a lot of work? So what are some of the key trends when we look at cross-border? Number one is, if you see the deck, is absolutely Trump is effect number one. And means, definitely Trump have made deal not so great again because there's a lot of deals have been blocked for CVS. CVS stands for Committee of Foreign Investment US. And CVS, during the Obama days, pretty much 90% of most of the deal will pass. But right now, during the Trump years, about 60% of the deal will pass. And most of the AI or anything robotics are being blocked if you are, money that is not from US soil. So it's been super interesting because if you look at Broadcom wanted to acquire Qualcomm, which got blocked. And then on top of that, Alibaba actually want to invest in MoneyGram, which also got blocked last year. So Trump is definitely a big effect in terms of sort of the cross-border investment and M&A deal. Do you think this is going to work?
Slides are white.
Oh, weird. All right, forget about that. Strand number 2 is, even though there's a lot of like legal like blockage with all these like Trump effect, the fact that even there's a lot of roadblock, foreign investors continue to invest in U.S. startups. And in fact, for 2018, it's pretty much at least 30% increase compared to 2017. So there's definitely continue to be a lot of inflow of investment, particularly for later stage. Once you get the report, you'll see I listed the top 10 deals for 2018 for Silicon Valley, and you will see the top 10 deal, 70% of them have foreign investor as part of it. Of course, the most active one is SoftBank. So the trend number 3 in the report is definitely the SoftBank effect. SoftBank spent over $100 billion last year overall in the US, and the number 1 deal is actually at WeWork for about $4 billion. But just in Silicon Valley alone, they spent about $30 to $40 billion investing in later stage deals. So SoftBank is definitely one of like the most active late stage foreign investor in the US. Trend number 4 or 5, what I started to look at is what are some of the activities in terms of the Apple, Google, Apple, Facebook, and Microsoft, what are they doing in terms of investment overseas? So it's amazing that I actually have a slide in my head even though I can't see anything. So I can say that Facebook is definitely the one company that do the least amount of investment, and I'm only talking about overseas, right? I'm not saying that they're not investing or acquiring company on mainland US soil, but in terms of acquisition is mainly only AI in the UK and 1 deal in the last 12 months. And if you start looking at either Google or Apple, absolutely don't do that much investment either. The only one that is more notable, they did invest in Didi, which is the Uber of China last year. But still, like most of, in terms of activities, investment acquisition is really not that many. In comparison, Google obviously have Google Venture, GV, they're a little bit more active, but still most of the investment is in the US, not so much overseas. But I have to say, definitely the number 1 in terms of investment, you start to see company like Walmart, which spent $60 billion acquire Flipkart, and that is a big deal. So you start to see that even though maybe like the tech companies on Silicon Valley are not so active, U.S. company realize that there's, regardless as e-commerce of gaming, are more saturated in terms of growth. Therefore, they are starting to look at overseas market. India is definitely one of the hotspots because of sort of like the next generation, another billion people is going to get on mobile, and now like data is much cheaper in India now. So you start seeing, regardless as Google, Amazon, and now Walmart, get into the Indian game. You see like more and more of the tech giant in the US will want to go overseas, regardless of investment or acquisition. Compared to all the big giants in Silicon Valley, Microsoft is actually a lot more active overseas. Have a lot to do with because Microsoft have a really big office in Beijing and also in India. So in the report itself, like the sort of the last half of it is actually focusing on analyzing the BAT. For those of you who may or may not know what it stands for, as Baidu, Alibaba, and Tencent. Baidu, compared to Alibaba and Tencent, are probably the least active in terms of investment and M&A. But if you look at the report itself, what is really, really amazing, other than obviously Alibaba's strategy is absolutely focused on more either payment. They were trying really, really hard to buy MoneyGram in the US, which didn't happen. But they will continue to push for e-commerce and payment as the strategy for going overseas in terms of investment and acquisition. But by far, out of all the internet giants in the world, Tencent is absolutely the number 1 in terms of investment and acquisition. It is amazing in terms of so much activities that they've been doing. The most notable one actually just happened last week is they invested in, I forgot, 300 and 400 million into Reddit in terms of investment on the social side of things. But they are very, very, very active in all over the world, regardless it's social, gaming. I don't know how many of you realize that Fortnite, which is the #1 game in the US, is developed by Epic Games, and Tencent actually acquired them, I think in 2011, for about 400 million, and many of the users have no idea this is happening. And also Supercell and many, many others, amazing game companies, are all acquired by Tencent and owned by and run independently. So out of all this, sort of sum up like what is going on, and if you look at the report on like why do people do it, because historically some of these cross-border deals have done amazingly well, and then if you look at your home country, there's really a saturation of growth. So many of the tech giants started to think, okay, I don't necessarily have to acquire from day one, I could invest. So more and more of the tech giants are actually thinking, investment or maybe later on acquisition is a way to go in terms of corporate development. And then last but not least, I started to think why Tencent, compared to all the other companies, are so much more active than the others, I think have absolutely to do with their executive team. So, and by the way, I'm not saying that all the awesome companies, oh, cool, awesome, all right, it works. Yeah, so really quick, so I'm gonna stop flipping. So I'm gonna go back to what I mentioned earlier. Of course you can read all this, so let's see. Oh, shit, okay. All right, so really sum it up, because I only have about 8 minutes left, and yes, I did memorize the whole thing. So in summary, if you look at this, the most active cross-border company is Tencent. The most active cross-border investor as dollar amount, which is 100 billion, is SoftBank. The largest cross-border deals, the 4 billion is actually WeWork by SoftBank. The largest cross-border exit is Flipkart, is 16 billion by Walmart, which is the bottom slide. Okay, I'm not gonna go through all this, but you can see it's just amazing how much more Tencent have done 26 deals compared to all the other ones. It's only like a few deals. But I do wanted to recap the really quick trend, which I memorized. And is Trump definitely, this is no deal effect. Okay, I will show you some really funny photo in a bit. But definitely acquisition in terms of, of American companies will continue to go strong. A lot of foreign investors love Silicon Valley despite the fact that CVS. SoftBank is definitely super aggressive in terms of later stage investment. And Silicon Valley internet giant is slowly going overseas, but it's definitely not so active compared to Tencent. All right, so with that, I'm just going to actually reverse the slide because I have so much fun finding these graphics, which I found it like super funny. You can read it later, but like this one, and of course this one, and this one. I'm just gonna put this right here. So with that, we have about 6 minutes. I want to open up for any questions, comments, and happy to answer them. Or we can flip it to a slide if you want. What are your thoughts on Tencent investing in Reddit considering China's stand on censorship? Well, for sure that Tencent have no right, or just because it's invested will have any impact on Reddit per se, but obviously I'm well aware some of the Reddit users are super angry, but Tencent have no right in the US, and so I don't, and honestly, I hope I'm not being videotaped, but in China, definitely, there's tons of censorship, and the BAT and many of the internet companies in China, they don't even have, it's not really, it's their choice. It's just how like China work. But in the US, we're completely a different law and policies, and just because they invest have nothing to do with censorship per se. One other thing I do wanted to point out related to this question is, I think the American mentality, if we look at Facebook acquired Instagram on WhatsApp, and immediately this company basically as part of Facebook, right? The entity on WhatsApp or Instagram they don't exist anymore after the acquisition. But in outside of US, what's really interesting is that a lot of these including SoftBank, right? If you look at SoftBank and how they invest, they're very, very comfortable of even though if I own 50%, pretty much I own it anyway. But if you look at the way that they do acquisition or investment, they think like Berkshire Hathaway. Like they actually don't necessarily have to be the one that operates it, which is very different from the U.S. mentality. And Tencent actually just IPO'd Tencent Music, which is obviously Tencent owned majority share of it, but there are many little subsidiary company all gone IPO. So it's a very different way when you look at M&A compared to U.S. and China. All right, second question, interest to know 500 startup special program for MENA. It's going to include, I have no idea, Sub-Saharan Africa too, any special program for SSA. So for really quick, I believe the 500 Falcon Fund is about 50 million. Our main partners are in Bahrain and also in Dubai, actively invested in sort of the MENA region. I do believe that they will look at Sub-Sahara, although don't quote me on it because I don't run that fund, but I think Hassan and got their names, they definitely will be open to talking to you guys. So let me know if I can help. And I'm really easy to find is 500 Edith at 500.co. And the best way, by the way, to make it really easy for anybody that you meet in a conference, because the likelihood of you remember 100 people that you meet in a conference is not likely. So the best way when you connect with investor, whoever you meet, just to send a really awesome written short blurb, including whatever traction that you have. Knowing that whoever you talk to, I'm definitely not the right person for SSA, but I'm happy to forward and connect if they are interested. All right, Facebook, Stripe are investing in startup. Is really in Africa? Is Tencent, Alibaba going to invest in acquire company like Jumia and e-commerce? So I would say my understanding, and I don't work for any of these companies. All I can say is, let's say Facebook and Stripe, I actually have I spent half of my time mostly in China. I have constantly run into folks in Facebook and Stripe in Asia. They are even though they can't really operate in China, but there's tons of Chinese advertisers that want to go overseas. So just because you're not operating in China doesn't mean that you won't have business from the Chinese. And then Tencent and Alibaba, if you look at the report, I think their focus been, at least for the next 12 to 18 months or so, will more likely be in Southeast Asia and India, even more so than the US. I think Africa is very exciting. You obviously see a lot of infrastructure growth for One Belt, One Road that's happening in Africa. But I think that obviously these guys are thinking about it, but the most of the activities in terms of investment and acquisition will be Southeast Asia. Have you made any observation about these trends in Latin America? And if you actually look at some of the Chinese activities in terms of investment, been more and more active in Brazil, more like sort of the sheer population and growth. I think Didi either acquired or invested in 99, don't quote me on it, but there's definitely more and more activities, I think more so for the Chinese to go to Latin America than the US go to Latin America. Mostly because I think that just the understanding of a developing country and what it needs, what it takes to really grow that. The Chinese have no problems, sitting on a plane for 30 hours to make things happen. I think US in certain way, we're so lucky living here. We just, the ARPU is great, it's so developed. It's just less work, to develop here. So I found it, people from developing country are more likely to go to other developing country than coming from a developed country. All right, what are your thoughts on China involvement in Africa? I think it's a great thing. So I don't have a particular thought, but for sure that they're a company like Huawei, ZTE, or a lot more infrastructure things that you see that is developed by the Chinese, particular airport, railroad, just network infrastructure. I think without that, it's hard to develop internet-related things. All right, I'm just 20 seconds left, and have you ever seen any impact from Brexit? All I can say that this is the best time to invest in the UK. When everybody leaves, is the best time to go in. When things is certain, is the best time. So I usually like to be a little bit more contrarian. Don't listen to what everybody else had to say. Really think for yourself. If there's a particular vertical that you're excited about, this is the best place to go to places where everybody leaves. And I think that's how all investors should work. So thank you very much. I talk like...
Thanks so much, Edith. That was amazing.